Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is March 22nd, 2018. Tonight we're going to look at gold, the ETF being GLD. We've got short and intermediate trends to the downside. Got a mixed bag here with the long-term trend. So there's really not a lot showing up here in the trends for sure, and the technicals are a little confused because we've had a little bit of a sell-off and then we've been in a consolidation phase. So the two things that are really taking place here is, first, we had a wave low that triggered. That's an important thing for the basing to the market. If we take a look at the patterns and we take a look at gold down through at the bottom here, that we actually have a lazy day that's popping up, and what you'll find is that once we have at least 15 days of consolidation, if you will, low energy, which we'll take a look at in a second, but the lazy day is a point where the market is neither overbought or oversold for an extended period of time. And you can see that we've had something going on here with the 10-year notes. The US dollar now just triggered, and so did the euro, and so too has gold. So the market's basically been consolidating here. So if we take a look at gold, you can see this consolidation. Yes, there's been a few little pops here, but the market for the most part is consolidating. So you can also see it down here in the energy level, which we're going to look at here in a little bit. And when you're below that yellow line, the green line is the energy level, and when you're below that yellow line, that tells you that you are in fact in a kind of a quiet period. And I always refer to this like a spring being wound up, that eventually it's going to explode one way or the other. Now, right now, we have support to the market from the lows that were set a couple of days ago, and we're finding a little bit of resistance at the 50-day moving average, so we're kind of stuck between them. Now that's a pretty wide gap. Now don't get me wrong, but that's a big enough move. But the market has been consolidating here, and now that we've got the lazy day having triggered, we're just sort of in wait mode to see how things are going to play out. Now our systems are long, so let's just go back to the website and get a feel for what's taking place here. We got the systems that are long. We've got 1, 2, 3, 4 different systems. They're all intraday. We've got a 120 minute, we've got a 45 minute, we've got a 60 minute, and we got a 90 minute. They're all long. We got mostly our patterns. We got one swing based, so we got a nice little profit on a per contract basis, and we're basically just going to see us run out. We can break above that 50-day moving average. Now, I mentioned that the market was in a consolidation. We saw that in the lazy day, the 15, little sideways phase that we're in. But I also mentioned that we're also in a low energy zone, and that just sort of corresponds with the lazy day. And so here's gold. This only happens about 3% of the time. So the fact is that this is not something that that pops up all the time, and it is really a scenario that the market's going to break one way or the other. Something is going to happen. Gold, a proxy for so many different things that you'll certainly see it, whatever it is that's going to occur, it certainly is going to show up here in gold. So if we again take a look at the market, what we're looking for, what we're hoping for, is for the long position to break back above that 50-day moving average. If it does fall, not a big deal. We'll probably find some budding. This is brand new, so budding support to the market here. It also happens to correspond very closely with that of the 200-day moving average. This is looking at this support level is looking at something very different. So the fact that it's running up against the 200-day moving average is just pure coincidence. But the reality is that when you have that coincidence where we have the support and the 200-day, and you've got resistance at the 50-day, those are easy things for you to be able to watch at home and really get a feel for what's taking place. So the takeaway from this deep dive is it is in a consolidation both through the energy level as well as the support resistance levels and the lazy day that we just popped up here with for the pro alerts. All three of them are telling us the exact same thing, and that with our systems being long and having just recently triggered a wave low trigger, that it bodes well for the market to rally. And if it does rally, it's probably not going to go that far because we've got fairly strong resistance to the market from the highs that were set not too long ago in February, actually late even January. So the level for the resistance is at 1370, we'll say. That's where the resistance is. And we got a 50-day, which is very strong. We got a corresponding, and this is still growing, a 38-day. So from that perspective, there's a lot of resistance to the market. So even if the market does rally, we're not really expecting it to go too far. But the nice thing is that with this consolidation, if it does rally, then you're going to have an explosive move, and it will happen very, very quickly. So for those of you that might trade options, you might want to look at gold and figure out what it is that you want done, and probably put those positions on very quickly and just simply monitor the market because when it does move, it's going to move abruptly. So that's tonight's dip dive. We will take a look at another market tomorrow. Thanks for watching. Bye-bye.